Good morning. Welcome to the Milk Road Show, the daily crypto show that gets you into the party that even the bouncers don't know about. I'm your host, Jay Hamilton. It's Tuesday, March the 25th, and today we are so excited to be joined by Arthur Hayes, legendary investor, co-founder of BitMEX, and founder and CIO of Maelstrom, his family fund where he manages their liquid assets. We are going to discuss three takeaways that Arthur had from the FOMC meeting last week and the shift that he saw in what Powell is saying and why he believes they were going to get a liquidity surge out of the US. And he's also going to tell us when he thinks that is going to happen. We also touch on Arthur's expectations for us this year, and he talks about why he thinks April could be a bad month for crypto. So you're going to want to listen to that. He also gives us his predictions for the end of the year, which are mega bullish. We also take a look at his macro outlook for the four biggest economies, the US, China, Europe, and Japan. Before we jump in, tomorrow is Wednesday, or the belly button of the week, as they like to say in Mexico. And we've got Hasib, managing partner from Dragonfly, joining us live at 12:05 p.m. Eastern Standard Time. Hit subscribe. Make sure you guys show up to ask Hasib your questions. We talk about his thesis on ETH for the rest of this cycle, as well as his outlook on a bunch of other tokens. It's going to be a fire show. So excited. First time Hasib's coming on the show. It's going to be awesome. So make sure you subscribe right now. Without further ado, Arthur, welcome to the Milk Road Show.
Thanks for having me.
Yeah, man, really excited to have you. Okay, one question I'm not going to ask now, but I wanted to ask by the end of the show is how I get into one of your legendary parties. But we're not going to start with that. Let's start with what's more likely, Bitcoin above 100K or back below 80K?
Above 100K.
Really? Okay. Why?
So I was parsing the statements of Powell at the recent FOMC last week, and I think there were three major changes in their stance, which honestly I didn't really expect to happen this quickly, or with only the S&P down 5% or 10%, whatever it is. So the first thing is, I lay the context that I believe that the U.S. economy is very strong. Whether it's due to like fraudulent government payments or not is kind of irrelevant at this stage. Real GDP growth is growing, unemployment is low, and the U.S. stock market has been doing very, very well, post the lows in 2022. And against this backdrop, the Fed had printed something like $4 trillion between COVID and now. They've reduced their balance sheet by about $1 trillion. Inflation, at least according to their made up bullshit statistic, core PCE, is still above their made up bullshit target of 2% a year. And so, if you look at all these factors, there's no reason why the Fed should be cutting rates and or slowing down the pace of balance sheet runoff. It's a quantitative tightening. Yet they reduced QT in June of 2024. And yet again, Powell got up last week and said that they'll be reducing the pace of QT for Treasury bills from 25 billion to 5 billion per month. And I think that's very instructive because obviously there's a problem in the Treasury market. There's too much supply. A lot of the inelastic buyers like China and other large exporters are no longer participating in the same way that they used to, given the surpluses that they're generating in their trade account. The Fed is letting the treasuries mature off of its balance sheet, so it's not buying. And the commercial banks can't buy anymore because their balance sheets are full due to the capital charges they take when they buy treasuries. So, Besson has a problem if he's going to get these 10-year rates below 4% or whatever he believes is the target. It's just not going to happen given this backdrop. And Powell stepped up to the plate, did his duty as a member of the TradFi establishment, and reduced the pace of QT when the U.S. economy is strong and inflation is above target and monetary conditions are very easy. And so that's a signpost that whatever things he's looking at, and I don't know what it is, he believes that there's a problem and he needs to make things easier in the treasury market to fund these gargantuan deficits. That's the first thing. The second thing is he said something quite interesting, which was he teased that he'd be starting quantitative easing or actually outright buying of treasuries at some point in the year. The statement was something to the effect of he could see in the near future, but not a definite, that the Fed's balance sheet could be kept constant. However, the $35 billion of mortgage-backed security runoff could be matched with a $35 billion per month purchase of treasuries. So technically speaking, it's not QE. Maybe it's like QT twist, right? I sell down on one hand and I buy on the other. But as crypto traders, we care about liquidity into the treasury market, the most important debt market in the world, and how this money printing machine is fired up from America. And so he's saying, I'm going to be doing QE of 35 billion a month, you know, TBD, but probably I would imagine within the next few meetings. Because why would he say that at the press conference, to sort of see the market's reaction to essentially QE for treasuries? And then finally, everyone's worried about tariffs. Are they inflationary? Is it, going to cause all this mayhem in the markets? And what do we care about as crypto people? We care about money creation. So if tariffs are inflationary, does that mean that the Fed has to then raise rates, increase the pace of quantitative tightening, stop QE, whatever, right? Make monetary conditions tighter because there's a big inflationary impact of tariffs in the domestic US economy? Powell said he looked through the impact of tariffs. If there is any inflation, it's transitory, which basically means if I'm cutting rates and easing monetary policy, even if Trump does a 50% tariff and inflation skyrockets in the US, I believe that doesn't exist in the medium term. Therefore, I could continue cutting rates and or doing quantitative easing. So we now have QT to QE, and we've said that tariffs don't matter in terms of inflationary impacts in the U.S. economy. This means it's game on. This is a similar vein, and I know people have been shitting on me on Twitter when I made this call, like, oh, it's not technically QE and blah, blah, blah. Well, in 2022, Bad Girl Yellen, former U.S. Treasury Secretary, said, fuck you, Powell, I'm going to ease monetary conditions. I'm going to issue bills and take the reverse repo facility down from 2.5 trillion down to zero. And so if you were stuck in this mindset of, oh, the Fed's raising rates and doing QT, therefore asset markets must go down. Well, Janet Yellen has a bigger bazooka, and she said, no, I'm going to take that 2.5 trillion and pump it into the markets. And you would have missed the massive bull market in everything, crypto included, from late 2022 up until the present. And so I think people could be making a similar mistake today. Yes, short-term rates are 4% or whatever they are. Yes, technically he's doing QT, but for the thing that matters, U.S. Treasury market liquidity and how much of that is pumped into the global markets, Powell is telling us that he's going to be switching to QE, and he doesn't care if Trump does some 20, 50, 30, 70% tariff across the board, because any inflation in the U.S., he's going to discount that and continue doing what he's doing. It's easing monetary policy. So I think this is a big sea change from the U.S. and a pivotal moment in terms of how this particular microcycle is unfolding, and therefore I've changed my bearish stance, my call for 70, 75K Bitcoin, to one where I think now we can, surpass 100 through 110, the previous all-time high, and go much, much higher.
Okay, I want to unpack some of that. But first, I just want to give you a chance to explain the seat that you sit in and what you do every day, because I think it'll help set up this conversation. And it's interesting to me that at your fund, you wear a few different hats. And one of them, the one that I'm most interested in, is management of your liquid fund. But let's just talk about what you do every day so everybody understands that.
So there's a team that does most of the work, run by Akshat Vaidya, and he does early stage token deals and advisory stuff. So we write $50,000 to $100,000 checks into seed rounds of token deals, things that we're very excited about, and we also advise projects. So probably our standout success this cycle has been Athena. We were one of the founding advisors of that. It's done phenomenally well. We were also early investors in EtherFi, investors in Pendle. So we've had some great wins this cycle. I focus more on the liquid stuff and have a macro overlay. So I have a view on the market, which is I'm bullish now. So I'm going to tell Akshat, you guys need to increase the pace of deals. You guys need to find more ways, find more places for me to deploy this excess capital that we've generated from profits from other positions that we took, from 2023 into 2024. And so I am like sort of the accelerator, like speed up, slow down in terms of what you're doing. And that's sort of my role in the CAO. I'm not really looking at specific deals. Mm-hmm. I might opine on a narrative here and there, but it's really the investment team that's doing all that deep work in terms of what it is that we're actually going to be investing in.
Yeah, you really bring to the table the foresight to say, hey, here's where I think the puck is going next and how we can position ourselves to be there as you allocate
Yeah, and I
your
don't know which
liquid.
altcoins are going to be the one best for pointing. That's Akshat's job to sort of figure that out. But I'm like, okay, well, I think if Bitcoin goes up, everything the things can go up. If Bitcoin goes down, nothing's going up. So let me have a view on Bitcoin and why dollar liquidity, fiat liquidity, euros, yen, yuan, why that's going to go up or down in the future, and then let's sort of adjust how we're going to either do more deals or do less deals in sort of the altcoin space.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over 1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. Okay, so let's continue with you mentioned this microcycle, and I think that's you're the first one to use that word. No one's used the word microcycle, but it does feel like that's what we're in right now. Is we were in a bull cycle. Everybody had expectations of we're all going to Valhalla. 2025 is the year, and then liquidity took us in a different direction. Plus a change in policy in the U.S. and Trump and causing all this uproar also took us in a different direction. Give us what's your thesis for, or scenarios, probabilities for where we go from here? Obviously, I know we talked about Bitcoin, but what's the timelines that you expect to see, and how do you think this will play out?
So I think probably the roughest month right now is probably the April month for us, because
Okay.
U.S. tax season is April 15th. So that's a drain in liquidity as people have to sell things to pay their taxes. We don't know how the debt ceiling is going to resolve itself. What is the Treasury going to do with their checking account? Are they going to draw it down to zero and then refill it back to 850 billion or some level? We don't know. But I think all those sort of questions will be answered April and early May. And we already know that Powell has caved. Like, you don't cut QT, tease QE, say that tariffs are not inflationary. That's just like economics 101. Yes, tariffs are inflationary, right? Like, it's just like, it is. Whether or not you want to admit it is just is different, that good or bad, but he's caved. He's perfect. He's firmly been fiscally dominated, and he's going to do what he needs to do. He'll try to spin some sob story about how he's still trying to fight inflation, but doing QE in the treasury market and whatever, that doesn't really matter. At the end of the day, he's on side. And so I think that, Trump invested his plan, which is to rework the global trade system, which necessitates capital leaving the US, foreign capital, who no longer have dollars generated from trade surpluses. They have to leave the treasury market. They have to sell stocks or not buy as many as they used to. And therefore, we need another source of liquidity, and that's the Fed, and that's the commercial bank. So the final nail in the coffin will be when the Fed agrees with Bessent to end the supplemental leverage ratio. And once that's done, then it's just like we're going nuts, because when you allow banks to essentially create money and buy treasuries and suffer no capital charge to their equity, then they could do that in infinite size. And so they can finance the US government at whatever price needs to be financed at. And this will be the model. And once the Americans do it, then the Europeans are going to do it to rebuild their defense base, right? The European banks are going to load up on bunds and OATs and, Italian bonds and whatever, right? To build another juggernaut military. And then China could say, oh, great, we can now allow the currency to dirty float because we know it's not going to depreciate against a dollar because the dollar is printing so much. And so we can now unshackle our money creation onshore because right now China is fiscally stimulating on one hand, but then the PBOC is tightening liquidity to keep the yuan at around 7.3 versus the dollar, which is kind of self-defeating policy. China can reflate if the US is reflating, and then Japan will do what they do. It doesn't really matter. So I think this change out of the US will allow the Europeans and the Chinese to print the money that they were going to print anyways. It just accelerates the timeline. So I think, we could still chop around until this summer, but I think it's be very clear, and the sentiment's going to change. You know, the consensus sentiment will change to, oh, everyone's printing money by the third quarter. And given that Bitcoin should lead that, we should be much higher by then, and then we can hopefully make 250,000 by the year end. I hope.
You think that's do you think that's a realistic target by year
Absolutely.
end?
I
Yeah.
mean, we went from 70 to 110,000 just because Trump said he was going to do some regulatory stuff. Not to say he's not going to do it. Maybe
No,
be
yeah.
in the timeline that people thought he was going to do it in, but that's what people traded on, and they took the market up, almost double just based on some words. So if we have words plus a lot of printed money, then I think the sky's the limit.
Okay, so you think chop through summer, unknown timing on exactly when money printer and liquidity starts to come in, but you think it comes in sometime end of summer, Q3 is
I think
your
the actual
rough?
money starts getting printed sometime, second or late second quarter, early third quarter. But Bitcoin's going to trade in advance of that. If this
Right.
becomes the expectation, then Bitcoin will rise and it'll probably take out the all-time high because okay, we believe that in the near future the money printing is coming, and all these other bad things that we were focused on from 110,000 to 76,000 don't really matter anymore.
Mhm, mhm. Bitcoin trades it's so correlated to equities right now, which is such a somewhat misleading thing for it. We market it as digital gold, and gold isn't correlated to equities, but Bitcoin still is. Is talk to me about Bitcoin's correlation to equities and how you think that through, and where you think equities could go from here.
So I think Bitcoin is correlated to global liquidity more so than equities. It's
Oh, I'm
just
so
that
happy you said that.
I mean, it's just that Nasdaq is very correlated,
Also
right?
correlated to
At the
global
moment,
liquidity.
to global liquidity. But I think big US tech has been the massive outperformer of the last 2 decades. I think that outperformance is over because at the end of the day, if the Chinese, the Japanese, and the Germans are no longer exporting as many things to the US because of tariffs, because Trump and Bessent and Rubio and Lutnick are very clear, we want to reduce this trade balance. The flip side is then the financial account balance has to fall, which means there's less dollars able to buy U.S. assets. What have people been buying? They bought U.S. tech. That's what they bought, And so, yes, you could have the Boeings and the Lockheed Martins of the world doing very, very well, but I'm not going to pay 30 times earnings for some tech stock. Maybe I'll pay 20 or 15 or whatever it is, right? So the earnings could still be there. The multiple we pay goes down because the foreigners left the market because mathematically they don't have the dollars to buy the stuff. Or to stimulate their own economies, they need to sell the stuff, bring capital home, and rebuild their supply lines, the supply chains, just like the US is doing, or their militaries. So I think US tech will underperform the general rise in market. Not to say that it's going to go down, but I think you're going to see less and less correlation between Bitcoin and tech because the global liquidity won't flow there. It'll flow to gold, it'll flow to crypto, it'll flow to maybe value stocks, or whatever that the investment community thinks that is. But I think US tech is going to falter. And then we'll sort of dispel this notion that Bitcoin is correlated to equity. It's correlated to liquidity. Everything's correlated to liquidity, but stocks just have this additional component of earnings multiples and this very high percentage ownership of all sovereign funds and very wealthy people who had to put their money in the US because it's the only place liquid enough to store these excess dollars created by the imbalance that Trump has been very clear he wants to solve, wants to correct.
What would be the red flags that could happen that you're worried about? What are the scenarios that you're watching that you're thinking, okay, if this happens in the next 3 to 6 months, then I'm concerned? Anything that's on your mind there?
I think it's an ideological thing. So during 1929, in the U.S. Great Depression, Herbert Hoover presidency, Andrew Mellon was the Treasury Secretary, and he has a famous quote when asked about, what do you think you should do about this stock market crash and the depression? And I'm paraphrasing here because I don't know the exact words. Something it was like, liquidate land, liquidate labor, liquidate capital. ... It'll force people to live within their means. They've been living too high, and we'll live better if we sort of deleverage the system. Now, obviously, that's a very painful message, not very good to anyone, really, in the short term, and politically unsuitable. So, Hoover is excoriated by historians as not printing enough money, and everybody loves Franklin Delano Roosevelt because he did the New Deal and printed a bunch of money. So there is not an Andrew Mellon type figure in global politics, US or anywhere else. And so if we saw that the average person supported austerity, meaning, okay, all these government programs are going, all this government spending is going, for rich people and for poor people, everybody's fucked, right? We're going to take all this leverage out of the system, take some pain and rebuild from here. Then I would be very worried for crypto prices in fiat terms. But I don't see any politicians with that message. Maybe the only one is Milei in Argentina, but that's a very specific case where they've did 50 years of Peronist government money printing. It took them, 5 decades to get to the point of having a Milei. I don't think that this is not what the U.S. person is saying. And I don't even know what Trump's saying. What does Trump say? Hey, I'm not cutting defense. I'm not cutting your Social Security check. I'm not cutting your Medicare check. Yeah, okay, there's some fraud and waste in the government. I'm going to go and deal with that. But I'm going to get deficit from 7% of GDP down to 3%. But it's still a deficit. They're not aiming for a surplus. So the debt still grows exponentially. So again, there's fundamentally no politician around the world that's saying, I want to remove leverage from the system, do a restart, and have a healthy balance sheet and grow from there. They want to run a high nominal GDP growth playbook, high inflation playbook to deleverage the balance sheet. That to them is less politically painful than running an Andrew Mellon type, let everybody get fucked, and then, let the chips fall where they may. Once we're healthy again, then we rebuild from there. So if we get Andrew Mellon into power and around the world, yeah, I'm then worried for crypto. Absent that, I think we're in a secular rise in money printing.
We really only touched on Bitcoin so far. Crypto has millions of tokens. You have, let me get your takes on everything non-Bitcoin. I'll let you go ahead and swear as much as you want about the many tokens that we have.
I mean, we have a lot of tokens. It's at the end of the day, I think people say, oh, I want to have altcoin season. Well, I think meme coins are dead for a while. They had the time in the sun. I think they're going to come back for sure. I think there's some useful things in that market structure, but there's been some people on Twitter saying there's, I don't know, $6 or $7 billion of value extraction, mostly from retail people who lost money due to MEV, trade bots, rugs, whatever you want to call it. And so they're not going to be coming back to the meme coin casino anytime soon. So I don't really think, there'll be some standout successes. I trade the Trump coin just because I think it's a good barometer of sentiment. But at the end of the day, I think meme coins is sort of going to quiet down for a bit. I think that projects with real users and real revenue that have launched already will be showered with capital. So the likes of an Athena, the likes of a Pendle, these are projects that, on a protocol level earn a profit. They have a real use case. There's product market fit, all those sorts of things, right? The token that is a high FTV, low float token with no users, a lot of good marketing, and a major sex listing, I think is still going to be shunned by most retail, even if the market is rising. And then we'll have a new crop of whatever that is that launches between now and the end of this cycle, which is going to be the new hot thing because it has no history, no baggage. I don't know what that is. I think it'd be very apparent when it comes out, but that's sort of where I see sort of the altcoin landscape.
What that says to me is that you like DeFi because there's I mean, A is the ones that
I
you're
like cash
mentioning.
flows. I'm not
You
sure
like
it's going to be the highest price performing thing, but I like project with cash flows because a project with cash flows is going to be there
with
for a
real
long.
earnings. Hmm.
Yeah.
Hmm. Yeah.
And yeah, okay. The bent of our portfolio is not to take a lot of losses to aim for the 1000x, right? Trading the 50 million market cap coin because it's going to go to a billion, right? That's just not our game. I'll take a 2 to 3x on my capital, but I know I can put a lot more capital in it, and it's not going to go down 75% just because some dev fucked up something or somebody said something wrong on the Discord channel, right? That's not my game. Different game for a different type of investor.
And you said that you think a lot of flows are coming into these cash flow projects, these fundamentally based projects. Where do you think those flows are coming from? What makes you say that? You think that's coming from retail, or do you think that's coming from institutional?
I think it's coming from crypto holders, right? Anyone who holds Bitcoin, right? You're rich in Bitcoin. Okay, what do I want to buy? Okay, I want to buy the things that I use. What do I use? I use a DEX. I use lending protocols. I use stablecoin things, right? The things that I actually use. They've been around. I could see sometimes they're giving away some of their cash flow, either buyback and burn or staking revenue to token holders. I like those. I like those things. And I think progressively as retail has gotten burned every cycle on, they've gotten less scammy over time, but like less shittier of types of projects. They're more discerning, right? Like people, I don't want a high FTV, low float token that's just getting get dumped on by the VC. Okay, that's a very smart way to look at it. So I went and I traded meme coins, which from a EV perspective, expected value, you were more likely to make 100x in a meme coin than you were buying the newly listed token on a major sex. That's just math. And that's why meme coins proliferated. I think that, but there are some projects that survive this downturn. They're still here. They still work. We all use them. And so I think they're going to attract flows from retail people who say, okay, I want to participate in something other than Bitcoin. Let me use a project that actually has users, actually has revenue.
Even though retail will still go after the casino, whatever that casino is,
Yeah, of course they will.
whether it be meme coins
But if
or
you're thinking about what the coin that exists now that in the universe where I can trade right now that I know of, I think those are the things that'll do well. The thing we don't know what the new thing is going to be that everyone's going to latch onto.
Yeah, and I think you're totally right. There will definitely be a new thing at some point. Do you think we're going to see a bank fail in the U.S.? Like, or do
No.
you think now that Powell said this that that we don't need a bank to fail in order to get
I mean, the only bank
the
that
liquidity?
failed, the only bank that they allowed to fail were the three crypto banks because they wanted to exact upon the flesh. And that was it, right? Every other bank, I think there were 2 or 3 subsequent bank failures due to the held to maturity treasury issue. And they all were met with a sweetheart loan to JP Morgan or a bank like that. The bank bought the defaulted bank and they merged together and depositors were made whole. Bank failures are outlawed in the United States. Like I mean, you might get a 0 on your equity, but I think as a depositor, the authorities have demonstrated that they will not tolerate any bank failures. Maybe they will if it's a politically, the politics of the bank are the wrong way, whatever that is, don't know. But I think in general, there is no such thing as a bank failure anymore in the US.
Mm-hmm. When we look at blockchains, there's so many of them, so many L1s in particular, and there's some that have real users and real adoption, and some that are in the top 10 by market cap that seem to not have much, but seem to continue to rise. How do you think about like an XRP or a Cardano versus like an Ether or Solana?
Yeah, so I mean, I've been very vocal. I think XRP and Cardano are complete pieces of shit, right? However, they whether from luck or from skill, timing was good, price was good, right? So, XRP and Cardano bag holders got in early. These are coins that launched in the first cycle of L1s post Ethereum or right around the same time. And therefore, people moved up a few ladders in the economic sphere by being long these tokens. And that's why they're rabid supporters. Doesn't matter what they do or what they don't do in reality. They'll be on socials, bashing anyone who disagrees with them and bigging up any announcement that is complete nothing burger because they got rich. And this is an example for founders right now, which is look at what they did, right? I know maybe it wasn't intentional, but at the end of the day, if you make users wealthy with you, they will be your biggest supporters, regardless of what you actually do in the project. So instead of just like dumping all this highly priced stuff on the market, engineer a way to give your token or sell your token or whatever it is at a very, very low price so that you have a great looking chart that goes up and to the right. And you have a lot of people who moved up a station in life because they believed in you. And they're going to be your best supporters, and they're going to make sure that everyone knows about your project. Instead of having, oh, I need to have this massively overvalued listing on a major sex, it lists, then the thing goes down to 95%. And after the airdrop, no one's like, oh, okay, whatever, next one. And you're ignored, and you just die a slow death. So I think that's a lesson from Ripple and Cardano that I try to impart on founders.
ETH versus Sol, which one do you think wins long term?
I think ETH still has a possibility to win long term just because there's so much hate. And so usually when something is super hated, then it's the best performing from that point in time. I think Sol has an interesting problem that if the meme coin, fad has really faded for the time being, that's going to be a big hit to transaction volumes and revenue on chain in the Sol ecosystem. And so I'm not sure. Yeah, Sol's going to go up in price for sure if everything's going up in price. But will it outperform ETH? I don't know. Will there be another L1 that doesn't have that baggage that could go up a lot in price? For sure. Obviously, I'm a big Aptos supporter. I think that they have some interesting things that they're cooking that could really juice their token price going forward. But at the end of the day, I think Solana it's been pegged as a meme coin chain, and that really worked in their favor in most of 2024 and early 2025. And now that I think that section of the market is going to be more bound for a while, they need to find the new narrative. But it's a very big asset that they've got to lift, right? So it's 70 billion or whatever market cap coin, big coin. So they need a big new source of transaction volume.
What would you be watching for from Trump or Besant to say that would make you feel like we're done with the pain that they've been pushing us through and the change that they've been pushing us through?
Oh, I think my point is that, well, they haven't even really even started. If they're really serious about this global realignment, now they're just having conversations. Now it's,
Mm.
I'm going to threaten you with tariffs unless you do whatever it is. We'll see how that works. But I think the message is that even the little bit that they've done so far has scared Jay Powell so much that he is now accommodating monetary policy. So if anything, they're going to go even harder because they know that the money is going to be printed by the Fed to buy the treasuries that the foreigners aren't going to buy anymore because of the changes that they're pushing through. So again, I'm not afraid of tariffs because Powell said he doesn't care about tariffs anymore. He's still printing money. I also, believe what they say. They're going to try to remake the global trade system. Fine. Okay, cool. But you need to buy for those treasuries, and it's going to be the banks. Besant was on All In podcast. He said, I want to get the supplementary leverage ratio exemption for banks. I think he quoted something like it's going to be a 30 to 50 basis point reduction in the 10-year yield. Probably could be. I mean, he's a smarter guy than me, so that probably is the case. At the end of the day, they're going to go harder. They have the money printer behind them to change the things they want to change and not have the ill effects of a destruction of the treasury market.
How do I get into one of your parties?
Oh, we're having a party in Dubai for Token 2049. It's easy, of course. No, we've spoken for sure. Come on in.
Well, for those who don't know, why are your parties so legendary?
I really love partying, and I love house music. So it's a passion of mine. I like throwing parties. I've been throwing parties since I was in university. So it's something that we do. It's uneconomic, but I just really enjoy it. And I think
You think it's uneconomic, really?
No,
I,
I
I,
mean,
I would have thought
we
that you
don't
would
make
say that like the
we
relationship building and all that is so important.
yeah,
And there's
but I
value
say
in
like we
that.
don't
And
make any money on these parties, so it's not like we're selling tables and all this kind of stuff, but it's just kind of like funds the cost. Yes, obviously it's great for branding for Maelstrom, right? Because at the end of the day, we want our name out there. People think we throw good, cool parties and want to hang out. That's great for the company. But I've been throwing parties long before it made sense. We did it at BitMEX again. Did a massive party at a club be needed to get more traders on board? No, but I did it anyways because I like doing it. So I think that's what makes a good party, right? Is or a good artist in any can. You have to sort of almost downgrade the commercial viability of the enterprise for it to be something that's worthwhile to go to. And I love the music, and so I have a great me and my chief of staff have a lot of fun picking DJs and doing all this sort of stuff around throwing a party, even though it doesn't make us any money at the end of the day.
Who was that makes me think of, I don't remember which project. I think they bought a plane and filled a plane on going to Token 2049 last year, and then there
Oh,
was
I've
all
heard about
those.
that.
Do you remember that? Was that you? It feels
No,
like
it
that
was not
was
me.
you. Yeah, there was like hundreds of people on this plane, and it just to to everyone outside of crypto, it looked awful. Like it just looked like a bunch of young assholes partying on a plane without any consideration for the rest of the world. But to everyone in crypto, everyone was like, okay, yeah, Token 2049 certainly had a lot of money last year and was
Yeah.
firing on all cylinders. Bullish vibes were happening there for sure. Arthur, been an absolute pleasure to get you on the show. Last question. Any bold predictions for the rest of this year?
Bold predictions. I think still the bold prediction is $250,000 Bitcoin by the end of the year. I think a lot of people are a bit scarred from this natural, healthy correction during a bull market, but we're still in it. It's money printed, still money printed. We're going higher.
Let me ask you this. Do you think that we continue to see the same cycles that we've been seeing? We've been in this 4-year cycle trend for several cycles now. Is that going to continue, or are we shifting into a different cycle or
I think
different
we've
asset
always,
class?
I think, probably starting in 2017, we shifted into a global liquidity cycle. And for whatever reason, it's kind of aligned with this
Aligned.
4-year thing that we have in Bitcoin. But again, I only focus on global liquidity and I don't really care about anything else because at the end of the day, I view Bitcoin as technology plus fiat liquidity. The technology is pretty constant unless there's some massive change of Bitcoin core. Could happen, but not really in the cards right now. So it's all about fiat liquidity. What's the pace? Is it slowing down? Is it speeding up? What's the expectation? And I think if you use that as a framework, it's very instructive to identifying, a broad area of a top and a broad area of a bottom. Of course, you're never going to sell the top and buy the bottom. Like, don't even try. It's just a fool's errand. But as long as you have a general idea and, I don't feel so good about that, or I feel great and everyone doesn't, but look at this. I see the money printing happening. I should be going along, blah, blah, blah. Right. So that's kind of how I operate. And I try not to be dogmatic in any, it has to be a 4-year cycle and the month of March has to be like that. No, everything changes. It rhymes. Just go with the flow.
You're still listening to the show. First up, high five. Thanks for your time. Truly appreciate it. Before I let you go, I want to tell you about a product that I really like in crypto, and that is Salt. What is Salt? Let me tell you. But first, one thing that we talk a lot about in crypto is there a way to never sell your Bitcoin, to never sell your ETH? If you really believe in the long-term potential of these assets, you might never want to sell them, but you still want to realize gains from them. Well, how do you do that? One of the best ways to do that is through loans, to take loans against your Bitcoin. And Salt is one of the leading platforms for that. They offer crypto-backed loans with over 575 million in loans that they have already given out. They offer flexible loan terms, 12 months, 36 months, or 60 months with competitive interest rates. So whether it's Bitcoin or Ethereum, any crypto that you are super long on that you want to hold, you can get loans on them in order to start to get some gains from your crypto. Hit the link in the show notes. Check out Salt today. Go with the flow. Just get on the dance floor. Go with the flow. Feel the music in you and get after it. Arthur, pleasure to get you on the show, my man. Really appreciate your time today.
Thank you.
Thanks for listening in, everybody. Have a wicked awesome day. We'll see you back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.